3, 2, 1. Wow, that was quick. I came out of nowhere. Got the timing all off. We've been using different setups for like the lives and stuff, so I don't know what the hell I'm doing
It's
anymore.
been a couple weeks, right?
I'm going to get fired, man.
You might be. You get
got
three different skill sets going on
you
now.
gotta push the button at the right time. All right, guys, how's it going out there? We're back in the studio, and we have been doing some Facebook Lives.
Yep.
Which we've been doing them like Wednesday or Thursday. We're never going to have like a hard time or hard day. Usually Wednesday or Thursday because it's had enough time for the market to play out for the week or whatever. And we're going to see how it goes. We don't just post it on Facebook. We do it on Vimeo, our Vimeo page also, which we blast out a link. But anyway, the point is we're hoping you guys are getting some value out of those. We're getting a lot of traction with it. A lot of people giving us comments and it's cool. So if you guys, think of things, I will say this, as we evolve in doing those, they will be less market update, more education, like quick little education. Think of like
10-minute bites.
Yeah. Think of like a quick little, chewable piece of education, right? And not always a market update. That generally will be more for members only. But we're just trying to get you guys to see a piece of that first. And then, one of the things we're looking at doing, I believe it's next week. Well, not next week. I'm sorry, the week after. Yep. I'll be promoting it while Jerry's out of town. What we're going to do is Jerry's going to take a week or so and walk you guys through how to build a basic chart, right? Like he does his each week. So what you should be able to do after doing this, so we're going to do these through the Facebook Live. One a day, and then you can go back and watch the replays if you don't see it live. And you're going to walk through one chunk at a time, logging into the software, putting together a chart, and then you can do your weekly charts, right?
Right.
And then compare them with Jerry when we do the show and see how it's looking. And it'll help you actually learn to see the stuff in the chart yourself.
It'll be a much more hands-on way to do it, and we know that people learn. One of the best ways to do it is by just hands-on.
Doing it.
I mean, it's one thing to read the stuff we're putting out. Another thing to watch the videos that we're putting out, and another whole different level is actually doing it yourself.
Yeah, and
we're doing it with you.
Absolutely. Yeah, and we're getting a lot of people asking us about learning this stuff, and we're always sending you somewhere else. Yeah. And so we're going to try to start building this stuff ourselves, and we're still kind of linked to some of that other stuff. So there are sites already that teach you how to do this stuff. Sure. For whatever reason, it might not be in the context of the TSP, so it doesn't resonate well with people. So I think us doing it, within the confines or context of the TSP will help people kind of wrap their head around it. Yep. I'm hoping to learn something too.
Yeah, absolutely. I mean, it's the TSP. You got the 3 stock funds and the bond fund. So really, you can broaden out and look at all kinds of indexes that, in some way, kind of correlate to the S&P 500, or the Dow Total Completion Index. But really, there's only those 4 charts that you really got to know. And what's most important is knowing those 4 charts on different time frames.
Right. And that's probably going to be the second part of the series, right?
Yeah, that won't be next week.
Yeah, the first part of the series will be just kind of walking you through building a basic chart, price, volume, a couple other indicators, basic chart, right? Then we're going to do another series of like, okay, here's 3-month daily, here's, 1 year weekly, like that kind of thing. And then what you'll figure out in your head is, okay, here's the ones I need to set up each week. And it really doesn't take you much time.
There's only 4 charts.
Especially if you save it all. Right. And
we'll get into that. I mean, there are free versions and there are paid versions and a couple different softwares I'm going to go over. And depending on how much work you want to put into it and how much you want to invest in it, you'll have access to different tools.
Yeah, I think you guys will like it a lot. And before we get into the rest of the show, I'll put a plug out for the ebook. If you guys are new to the show or new to us and you haven't downloaded our ebook, it's a great way to start, because then you get an understanding of where we're coming from, what our methodology is, what we're doing here. Even if you've been following us for a while and you haven't read this ebook, it's growmytsp.com/ebook. It'll take you to the page, put your email in there, we'll send it to you. And there's a lot of folks that aren't signing up for the webinar after it. It may be the way we have the page design. I'm going to work on that a little bit. So it's not as intuitive to see it. but sign up for the webinar. I mean, there's no harm, no foul. You've already signed up. You've already, thrown your email in for the ebook. Sign up for the webinar. All we're really going to send you after that is the newsletter email. We don't really put out a lot of stuff, so we're not going to pester you for every day, every other day. The point is ebook slash ebook.
Yep.
And then
the webinar is good. It's a really we touch on different things. It's not just a rehash of the ebook.
Yeah, it's a companion to it. It's definitely not a replacement or the same. Right. You want to kind of have both of those together. Think about getting a textbook and sitting down in a class. You want to hear what the professor says, but you better have done the reading.
Yeah,
it kind of goes together. Yeah. All right, man. Let's get to the show. Okay. What do you got for us this week, brother?
All right. Weekly update show, 25 July 2021. So Monday, if you guys were watching, kicked off the week to a very rocky start. We had closed below the 10-day moving average last Friday, and then on Monday, gapped down all the way to the 50-day moving average on the C fund. And then after that, it was straight up for the rest of the week. And so every TSP fund ended in the green for the week. C fund up almost 2%. S fund, which was the big loser last week, down a little over 4%, now up over 3%. I fund up 1.15, and F fund up again 0.27.
Just so much green there this week.
All green.
All green.
Kind of sweet, right? Okay, so here's what we're going to do. We'll take a quick chart of what happened this week, basically in a very short time frame, and then we're going to have a little back and forth and go into quite a bit about the G fund. Bonus chart's going to be Bitcoin again because I bought it at the beginning of the week, and I just wanted to update you where it was when I bought it and why I bought it, and then we'll get into the 18-month weekly charts. But I'm going to apologize up front. We're moving from very short-term charts to very long-term charts, and then back to medium-term charts in this post. So just kind of be ready to...
Why are you apologizing?
Because in my mind, I can look at a chart and look at the time frame and be okay with it.
You know where the context is.
Right. And that's so
giving everybody... don't apologize like it's a warning.
Yeah, it is a warning. It's a heads up because it might make your brain kind of rattle back around a little bit because I'm switching from...
I always think of it like as a zoom. I zoom in, I zoom out.
Right. That's exactly what it is, except you don't get the visual of the zoom out or in. It just goes from one immediately to the other.
One chart to the next, yeah.
So perspective, right, is one of the most important, if not the most important, value of technical analysis. It's what enables us to make effective reallocation decisions given the TSP rules, right? And it's what allows us to watch the market moving higher and at the same time knowing that there's an end game, right? So, sorry, what just happened there? Nope, I'm good. Okay. So, what happened this week? Here is a 1 month chart. So the whole chart is 1 month. Each tick on the chart is 1 hour. Okay? You cannot trade this. You can't trade or make reallocation decisions in TSP based on a 1 month, 1 hour chart. I just wanted to put it up here because the 19th was the beginning of this week. So here was Friday at the close. Monday, we had a big gap down at the open, and the market continued lower. On Tuesday, we hit the bottom, and the market started going higher and really never stopped. And then on Friday, we had this gap up, and it keeps on going. So we went from on a 1 month hourly perspective, we were at an actual new high up here. We made a lower low because this low is lower than this one, so that's a problem. But then we made a new higher high, so now we're back in business. So from a very short-term perspective, obviously the market does not always go up, which is kind of going to be one of these things we're going to talk about in this concept of the G fund. But I just wanted to kind of throw that out there because if you're looking at the day-to-day movement in the market and trying to make decisions based on what happens day to day, it's not that it's very difficult. It's not possible. If you were day trading, this is a great setup, right? You got an A, B, C, and a big gap up. So you would buy it right there, whatever time of the day that was on that day. But we can't do those kinds of things. Okay. So let's talk about the G fund a little bit. Here's a question I got. It was the most recent question. It was July 16th, but there were others as I scrolled back through some of the posts and comments on Facebook, and they were all very, very similar questions. And it's pretty interesting because question generated a whole bunch of comments and some really impassioned positions with respect to the G fund. So we have less than an hour to make a transfer decision. Is it time to move to the G fund for a few weeks? I don't want to take a big hit. That was the question. So let's kind of dissect it a little bit. We have less than an hour to make a decision. If you're actively managing your TSP, you shouldn't be guessing, right? You should have a game plan ready to go pretty well before the market makes a move that's going to require you to make a reallocation decision, right? That's why we use technical analysis. You got the trend lines in place. You got your moving average lines in place. Ideally, you know where you are in terms of the Elliott wave cycle, and you're just watching it play out. So you should know what you're going to do when the price crosses your lines, whatever those lines are, whatever indicators you're looking at. So the decision definitely should be made based on the market action and not on fear of, I don't want to take a big hit.
Fear of missing out.
Yeah,
that's what we call it a lot, like FOMO, right? Yeah. And I think this is one of the most important things to let soak in, particularly before we get to this kind of build the chart series we're talking about, right? Yeah. The whole point behind building the chart is it allows you to kind of figure out your lines in the sand.
Exactly. That's exactly what it's for.
That's exactly what Jerry is doing when he goes, Saturdays are for the charts, right? Why? Market closes on Friday. Maybe you want to get after it Friday night if you're really into it. Maybe Saturday or Sunday. It really doesn't matter. You need to do it before Monday.
Yep.
Right? You sit down, you look how the market did for the week, and you go, okay, here's a pattern, here's a trend. Right. And knowing where your lines in the sand are so that it only takes you a few minutes to go, we crossed my line in the sand, right. Decision made. And that's how you can do it before noon. Now, it would be great if we didn't have to do that because we got the rest of the day that's going to happen, but we got to do what we got to do. I don't mean just Jerry and I. I mean all of us in the TSP.
Yeah, that's right.
You got to make that decision before noon. If you don't have your lines in the sand drawn on a chart, or you're not watching Jerry's line, whatever. Some version of it, you have to know. I mean, that's to your point, right?
Right. I mean, otherwise you're looking at it and hope and greed and fear.
Guessing,
that's all you got.
Gambling, hope.
That's all it is.
We don't like to work on hope.
No.
I hope I win the lottery.
Yeah. I mean, I hope the market keeps going up and goes up forever.
There's no way for me to control that.
Yeah. Okay, so second part, is it time to move to the G for a few weeks? So my question would be, why a few weeks? What would make you reallocate back to the stock funds, right? You need to answer that question before doing the initial reallocation to the G fund, right? You have to plan 2 to 3 moves ahead. 2 to 3 moves of what ifs are ahead. So exactly what you just said. If you are looking at your lines in the sand and you're looking at your lines in the sand and you say, okay, when it crosses this line, this is when I would move to the G fund. Now, on the day that it does that and how it does that, right, is what I'm looking at from 9:30 to 10:30 in the mornings. I've already made I've made a 99% decision.
You need confirmation.
I'm just looking for kind of the confirmation like first thing in the morning. That's it. I've absolutely got 99% of it.
Based on the closing the day before.
Right. And the charting and everything.
Which to point out is when technical analysis works the way it's supposed to work, you're always looking backwards.
Right.
That's the whole point. You can't look forward. We have no idea what it's going to do. And it's kind of to your point about, go to the G fund for a few weeks. you don't know how long you're going to be there.
That's right. That's
the only reason you would go. You're going there for a few weeks is you've already used all your moves.
Well, that's true.
Right.
Then you have to go. Then,
right.
then you're there. You can't get out.
That may
you're
be
in G-Fund jail.
yeah. If that's your context, then you may be there for a few weeks.
Yep.
But if you're thinking I'm going to pull out because the market's going to do what it's going to do for a few weeks, you don't know what it's going to do.
Yeah. So you've just changed your methodology from a technical analysis perspective to something else.
Right.
Whether it's, I mean, if you say, you know what, I'm going to go to the G-Fund for a couple of weeks because it dropped below the 10-day moving average line, and I know that the Fed's coming out next week with announcements, and I know earnings are coming the week after that. Like, you've just combined technical analysis and fundamental analysis. Nothing wrong with that.
Yeah.
But if you're combining
stop
technical analysis with hope and fear and greed.
A lot of times I see people stop playing football to play soccer.
Yeah.
Right?
Yeah.
It's kind of same, but it's not. Right?
Yeah. You can't show up in the soccer field with a football ball. Right?
I did, actually, when I played football in high school. I showed up with a soccer ball and everything. That's a whole other story. Yeah, I think the point that I hope to make through that is that, pick a methodology that works for you, that you buy into, and you got to stay consistent and stick with it.
Yeah.
Now, it doesn't mean you have to stay with it forever. You can change. You can't go back and forth, really. I mean, you have to kind of let it.
It's very hard to do that.
It's not going to work for you. Consistency is a key.
Yep. So then the last part was I don't want to take a big hit. Fear is not a good basis on which to make a reallocation decision. If you're going to actively manage your TSP account, make reallocation decisions based on the analysis and not on fear and greed. Okay. So there were something like 70 comments on that post, and the comments took us way down the TSP rabbit hole. So let me just say, all of these things and a whole lot more I've seen and heard on Facebook and every other kind of media. They're all true. Every one of them. No one should ever be in the G-Fund. When you move to the G-Fund, you're locking in your losses. The market always goes up. TSP millionaires never use the G-Fund, and on and on.
On and on and on.
They're all true, and they're all false. It's all based on perspective, on what time horizon you're looking at.
Jerry's favorite answer. It depends.
It depends. So if you're extremely positioned against using the G-Fund, I am not here to change your mind. What I'm going to do is put a little perspective around this issue and let you all decide for yourself. So, of course, we're going to do it in terms of charts. All right. What we're looking at is the logarithmic chart of the Dow Jones Industrial Average going back to 1902. So what I marked on the chart is the conventional wisdom Elliott wave count. All right, so you got 1, 2, 3, 4, and 5 is obviously not yet complete. So why are we looking at a 120-year chart? Much like a month-long hourly chart isn't super valuable, a 120-year chart isn't super valuable either, except to give us some perspective, right? So if you're looking at this chart, would you say the market always goes up? Yes and no, right? If you start down here at the bottom after the crash in 29, the market always goes up. No doubt about it. If you break it down a little bit, you got.
This is where you zoom in, too.
This is definitely where you zoom in. I'm just gonna talk through it. I'm not gonna break down all these sections of this chart, but so does the market always go up? Yes and no, right? In the big scheme of things, yes, the market always goes up, but we have long periods of messy sideways market action along with long periods of big price gains, right? So you got the top here in 29, you got a 78% decline. This was 78% loss from the top in 29 to the bottom in 34. Even before that, really, if you look back here from 1900 to 1924, this section in here, if you're living through that, you start here, you end here, the market's basically flat. I mean, it went up a little bit, but you had to live through these huge up and downs. It was a huge corrective period for 5 years. And then right about there, it broke out, right? Huge move higher, great. And then a 75% loss. But from the top in 29, it took to 53, 54 to get back to even. So if you had stayed, obviously there was no G fund, there was no TSP, but if you had stayed in the C fund, let's call it, or the Dow Jones Industrial Average, if you had stayed in it from here and rode the 78% loss down, if you were a TSP millionaire up here, you would have lost almost 80% of your money. So your million would have been about 220,000. And if you can stomach that and say, well, I'm going to ride it out because the market always goes up, that is some amazing fortitude. I don't know how you can possibly stomach it. And the reality is most people don't. At some point, you can be as ardent a buy and hold guy as you want. Most people will bail somewhere in here, and usually it's when you've lost half your money, which is why the 50% retracement Fibonacci level is the most important Fibonacci level, because people throw in the towel at 50%. They're like, I lost half my money, I can't take it anymore, I'm getting out. And a lot of times that's when the market turns back around. So at the bottom down here, you had a big move up, another ABC correction, and then we started to move higher. But it took, years to get back to even. And we went up for a while, and we had a huge run up. But then from 66 to 82, again, the market went flat. It was almost 20 years of flat.
Yeah.
I mean, that's 2/3 of your career. So if you did the buy and hold thing through here,
you made no money. I mean, you made the money you put in.
You made what you put in, and you made the government matching and all that, and that's 20 years it went sideways.
Yeah. But you could take advantage of it if you zoomed in,
If
right?
you zoomed in and looked,
and you got in and out.
Yeah, you could. And you won't catch all those highs and lows.
No, but you catch a little more than flat.
Yeah. I mean, if you we put in a high here. If you drew the trend line, we corrected down to the trend line, went sideways, came down, okay, no problem. We did an ABC back up to the prior high. Once we couldn't get back above that prior high, anybody who was using technical analysis as a methodology got out, because it was almost certainly
because the market
going lower.
told us so.
Yeah, yeah. And it looks like, I can zoom in here a little bit. But again, this is a 20-year, almost a 20-year time frame from the top. From this top. What were we saying? Every time I touch a computer, it breaks, right?
I wasn't going to say anything. I was going to let you work it out, bro.
Yeah, I mean, it's almost a 20-year period across here, and it hit 1, 2, 3, 4, 5 times. It hit that top before it finally broke out. That breakout was so important.
Yeah.
And so
what you wanted to do as best you can, even if all you could do was just get out on those big drops.
Yeah.
At least you saved some, so your compounding was better, right?
Yeah, I mean, it's those sideways markets are very tough no matter what. And
let's hope we don't have another one of those.
Yeah. Well, we do. We're going to.
Just kidding.
Actually, I didn't. It's in the. You know what? It's in the newsletter. It's not. I'm not going to do it on the show.
All right.
But read the newsletter this week, because it's all about the S fund, which is really interesting. What's going on in the S fund. But anyway, one thing in terms of risk, people are always like, I'm X number of years into my career, or I have X number of years until I'm getting ready to retire. How risky can I be? if you were lucky enough, or unlucky enough, depending on how you want to look at it, depending on where you came into government, if you came into government somewhere in this 20-year flat period, right, and then the market finally broke out right here, that is your least risky long-term place to get into the stock funds. Because we just had this huge sideways consolidation. The next move from that, once it's actually shown that it broke higher, it's absolutely going higher. There's so much pent-up energy here that it absolutely is going higher, and usually it goes the same length as the prior one, which is pretty much exactly what happened until the next correction here. So when people say, I'm just starting my career, what should I do? Or I'm retired, what should I do? It hurts my brain because the way my brain works, is the market should tell you what to do. It has nothing to do with you and your circumstances. I mean, I trade this stuff. It's 90% what the market is telling me to do, and maybe 10% of my personal circumstances or risk tolerance or whatever. But that was a huge buying opportunity right there. Okay. Then we get a whole bunch of years from breakout in 82 to the top in 2000, right? We had we shouldn't just blow by it, but right here, that was a 20% drop in one day. I think it was one day, the crash of 87. So it looks like a blip on the screen here, but you lost 20% over the course of, it was a couple days, but one day was a really big one. But it picked right back up. If you had connected these bottoms, these two, and just continued the line higher, the drop took you right back down to the trend line, and then it kept going. So were people jumping out of tall buildings in New York because they lost 20% in one day? Yes. Some people, if they didn't have lines to look at it and go, okay, I that was not good. I'm not happy about that. But I think we should have a floor here along this trend line, right? I mean, so if you don't have those things in place to help you, you end up jumping out of big buildings off, in New York. It's
metaphorically.
It's metaphorical. Well, sort of.
Some people,
yeah. So okay. Right now, this is 2009. This is the low in 2009. So we are in the fifth leg of this Elliott wave supercycle that began after the Great Depression down here. Okay. So what happens when the fifth leg completes? Let's take a look back at the 1-2 leg. So let's pretend that this one, because it played out in 1, 2, 3, 4, 5 steps, right? It's the same as the 1, 2, 3, 4, 5. Okay? So what happened after this 1, 2, 3, 4, 5? We had an ABC correction that finished down here at the same area as the 4 of the prior, right? If we push that out onto the bigger scale, then theoretically, according to the Elliott wave theory, if
it holds,
if this was the top, right? Let's just say that this was the top. We should get an ABC that takes us down somewhere to the level of the 4. Now, if we dropped from the Dow right now is whatever it is, I can't even read that, it's so small. This is a logarithmic chart. So if we drop back down to a Dow of like 5,000, 6,000, even say, what is this, 8,000, say Dow 8,000, people would be jumping out of big buildings in New York. You would have lost some insane percent. I mean, it's probably on the magnitude, if not worse than this, because it's logarithmic. So this distance, if it was the same as this distance, would be the same percentage loss.
Yeah,
it's
would
like
match.
80%. Huge loss. However, that's what the theory calls for. So it's just perspective, right? That's what the theory calls for.
Yeah, we're not Chicken Little Sky is Falling.
No, absolutely not.
Yeah, what we're saying is like this stuff is held true
Yep.
many, many times, right? And so if it holds true, this is something we need to be looking for, right?
Yeah, absolutely. It's just something to have on your radar, that's all. Okay, so now, like I said, this 120-year chart, this is really the part that we need to focus on. So let's drill down a little bit and get some perspective that we can actually use in our reallocation decision process. So here we are at the low in 2009. Okay, there were basically really only two good Elliott wave counts going forward. You got 1, A, B, C for 2, 3, and within this 3, it's an extended 3. So there's several 5-step moves. It's a big impulse move. 4, which we're going to get back to that. That was the COVID 4. And now we're in the 5 leg of this chart, right? So really this is 5 of 5 because this was 4 of the bigger chart, right? So this 5 is actually 5 of 5. Okay. That's possibility number 1. Possibility number 2, we're down here in 2009. You got 1, 2. Then within the 3, you got 1, 2, 3, ABC 4, 1, 2, 3, 4, 5 for the 5 of the 3. Then you get the 4, and then you get the 5. If that's if that is true, then the COVID drop isn't a 4, it's a 2 in the bigger scheme of things. If it's a 2 and not a 4, then this move is going to be monstrously higher, right? Because now we're going to a 3.
Mm-hmm.
So the conventional way, I think most people, if they're looking at Elliott wave count right now, if you go to the internet, that's what you're going to see. You might see this 2 might actually be over here, but this is pretty much...
The 5 is definitely up there, regardless of where the 2 is.
Right. This doesn't really mean anything. But the most people think the count is something like this.
And why is that important again?
Well,
because we would expect it to come down to the 4 again.
Yeah, right. So if we are approaching when we hit the top of this, whenever it ends,
and there's no timeline for that.
No, not really. I mean, we could go deeper into it, but I'm not going to do that on this show. Like we could do 1, 2, 3, 4, 5, which is what I think is actually happening. Mm-hmm. I'm looking for, this 4. When is that 4 going to begin? Is what I'm really looking for. We actually talked about that last week. But then
it would
the newsletter.
Come correct down to the previous 4.
Yeah,
and
something like that.
That's a nice big drop.
That's a big drop. Right.
Possibility 2.
Possibility 2. I'm glad you're kind of leading me on this, because possibility 2, even if this is a 2 and this is going to be a 1, 2, 3, 4, 5 and go much higher, the next move down is still down. The next move is still down.
Mm-hmm.
So regardless of how you count this,
the next move is generally down.
The next move
the next trend.
Yeah, the next major move is going to be down. And how that move plays out will tell us whether it's possibility 2 or possibility 1 that we're looking at.
You heard it here, folks.
Yeah, it's really only two possibilities. But the important thing here is either of them they both require the next move to be down at some point.
Yep. The trend is going down in either possibility.
Right. So
how big that down is tells us what the rest of it is.
Yes. And obviously this is playing out. This is the shortest when you compare it to this chart, right? It's a very short
period of time.
Why isn't this a reason? It's a very short period of time.
Doesn't like you.
Clearly. This is all that we really need to look at in terms of our career time horizon. Mm-hmm.
For those people in right now.
You're right. So
But we look at that big chart for perspective.
Perspective. Yep.
Because if we don't pull back that far, which most people aren't going to,
right?
Wouldn't expect them to, right? I'm not going to on a general basis.
No.
But what I'm going to is look to people like you who are doing it so that I can get my perspective. That's what we want to impart to you guys that are watching this, right? If you really go down the rabbit hole of technical analysis, you might do that yourself, right? But what you probably want to do if you're not doing that is you're doing some higher level of technical analysis, then you need to go find people that are doing the deep dive so that you can kind of see the long-term trend and understand it, right? And that's what we're hoped to be. Not that you need to go figure out the 18-year chart or which one was it?
120-year chart.
Yeah, 120-year chart, yeah. I was going to say 180-year, and I was like, no, 120-year chart, right? We're pulling way back so you don't have to. That's the takeaway there.
You know what? Seeing as how you asked.
Seeing
as how you asked. If you continued this chart backwards, theoretically, this top in 29 is a 3. Theoretically, which makes this a 4, and this whole move as a 5.
Right.
So even with our 120-year chart, which is basically way more time than is valuable for us, when we said that this 1, 2, 3 comes back here and it's kind of a Dow 8,000 is like an end of the world scenario. If this is 3 of the 1,000-year chart, right? So now we're talking about literally like a 1,000-year chart. If this is a 3 and this is a 4, then and this is a 5, then you got like that.
Right. At some point, way in the future.
It's going to take
decades.
Yeah, forever. And don't be confused. Like the price won't come down here. It'll on a percentage basis. It'll come down there. Just like in this case, the 4 it'll come down. But this is logarithmic, so it's a little bit hard to follow. But anyway, yeah, that's why we went to that, because you asked. So here's the bottom line. This is all about the G fund, and so why are we doing this Elliott wave deep dive? Here's the thing. We have come up, so regardless of whether you're looking at possibility 1 or possibility 2, we've had a huge move. We're in a 5, or we're in the beginning stages of a 3, right? Either way, the next significant move is corrective. It's going to correct this move. We've had this huge move here, right? Huge move. The next one corrects some of that move initially. So if you know that,
then where are you going to park your money?
Yes. Right. Now, I'm not saying to move to the G fund today.
No,
I'm just saying we're looking at charts that are the time frame, 2009 is what, 13 years ago? I mean, if over the course of the next couple of years, the market only comes down to the 32% retracement level, let's say, which is the least that it would reasonably correct to, that's a giant percentage move down. I'm not willing to take that percentage move down.
No matter when I'm at in my career.
Yeah, exactly.
Right? That's the takeaway too, right?
Right.
I don't care if I'm starting. I don't care if I'm finishing. In the middle, I don't want to take that hit.
No, definitely not. Definitely not. So does everybody, is the G fund bad all the time? No, it's a tool. It's a tool to be used when you can look at a chart and say, okay, we've rolled over from a major top. I'm going to conserve my pot in TSP, and I'm going to wait until the market gives me an indicator to get back into the stock funds. It's a tool. I don't look at this like I'm investing in the C fund or the I fund or the F fund or the G fund. They're all tools. They're just tools that you apply the technical analysis to be on the right side of whichever trend you want to look at.
Right, and that's the hardest part that you have to let soak in if you're trying to figure out our methodology, right? First rule, we want to be in the G fund when the market is trending down, which means we say all the time, don't lose money.
Don't lose money. Right.
We want our retirement account to stay as full as possible, okay? Because this isn't a brokerage account, it's a retirement account. I want it to stay as full as possible. And when the market is trending up, I want to be in.
Right.
That is the key right there. And if you can wrap your head around why and using these tools, right, like Jerry just said, instead of thinking about it as I'm buying stocks,
yeah,
right, that's the hardest part is like don't treat it like you're buying Apple versus Google.
Yeah, honestly, you don't even have to think about it as individual stocks because in the comments, people talk about it all the time as if the TSP fund themselves are being traded like individual stocks.
And they're not.
They're not because so we talked about it before, right? You got two buckets in your TSP account, right? The new money that's coming in, if we had the ability to insert it to buy the funds when we want to, which I mean theoretically you could if all your new incoming money was going into the G fund and then you were going to reallocate and quote unquote buy the C fund, let's say when it hit the 200-day moving average, you could do that. I mean, there's a lot of games, there's a lot of ways you can play TSP.
Mm-hmm.
But the amount of money that you have coming in every payday gets decreases in value as your overall account grows.
Right. That becomes your most valuable asset is your actual...
Your big bucket of money.
Right.
Yeah. So bottom line for this thing is that at some point we're going to get a decent correction and we use the trend lines and the moving averages and everything else. So this big run that we've had since the bottom in March 2020 will eventually correct. We put up a chart a while ago that was almost the same as this. I just redrew the line. And all I did was start here at the bottom and visual, just eyeball the average, right? I just drew the line through the sort of average of the way the rally had played out. And so if we just corrected back to the mean line, it's a 20% correction. From 3,500 to 4,412 is a 20% move down. I'm just not willing, and so this is actually a great line because like what if we could easily get the next correction that we're talking about to correct this move higher, right? So say we get a 1, 2, 3, 4, 5. The next correction down, ABC, can take us to that line. And we keep on moving. Okay. So what's an example of how you can play this? So we've put this up before. Investors Business Daily has a market direction sort of section in the paper, and it's also there on the online version. So on July 16th, it went from markets in confirmed uptrend to market under pressure. Okay. So what happens is, this is a way that you can use, and you could do the same thing with TSP if you wanted to. When the C fund, let's say, is in a confirmed uptrend. Okay, so when the market's in a confirmed uptrend, you are 100% invested in the stock funds. When IBD, using their proprietary software and algorithm, when they determine that the uptrend is under pressure, you would go to 50% stock funds, 50% G fund. When their algorithm says the market's in correction, you would go 0 stock funds, 100% G fund. I
want to point out there's a lot of millionaires that follow IBD.
Oh,
right? Yeah. And so when I hear a comment that says TSP millionaires never go to the G fund,
yeah,
I can't even wrap my head around like what would make you, and don't take this as a dig. If you said that on the
yeah.
don't. This isn't personal, right? We're trying to educate, and I didn't know these things either. Okay, I'll stop backpedaling and disclaiming. The point is, you got to understand that yes, you can use the G fund as a tool, particularly if you're a TSP millionaire, because going back to that example right there, market is in correction, right? Or what was the next one? I didn't let you get to it.
Well, you got confirmed uptrend.
No, the optional. I can't read the bottom one.
Oh,
my glasses.
Optional stop loss.
Okay.
That doesn't really apply.
Yeah, it doesn't apply. The bottom line is where I'm getting to is when we know we're in a confirmed downtrend, why would I not protect my $1 million if it's in my account? Why would I take a 10% loss?
Right.
If I know it's coming, if I know a loss is coming, I don't know if it's going to be 5, 10, 20, 30. Right. I don't know till the market tells me. Why would I take that loss?
I don't know.
Yeah, I don't either. If I know that a downtrend is coming, if it's a confirmed downtrend, if everything's telling me, if Jerry's telling you, and IBD's telling you, why would you stay in?
Let me throw out one thing, because I didn't do it on the alert. We talk about the alert that we did like a couple days before the COVID crash and why, obviously we don't have a crystal ball and we didn't.
Yeah, you had no idea how much the loss was going to be.
Right.
You knew the trend was going down.
Right. So let's look at this for 1 second, because even though I have it up here as Elliott Wave Possibility 2, this whole piece right here didn't exist before March of 2020, right? So pretend that's not there. If you were following it, you'd know. I could go back and show you the newsletters that I was putting out, but this count... 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5 for 3, ABC for 4, and we were in the fifth leg. So, from my perspective at the time, we are in the fifth leg. When the market gapped down below the 10-day moving average, a couple days before the COVID crash started, I was looking for a reason to get out because we're in the fifth leg. The fifth leg is about the same length as the one leg. It had been, we had this huge run up in the big scheme of things. I was looking for a reason to protect.
All the indicators are there.
All the indicators are there.
You had your line in the sand.
Yeah.
You're like, hey, so that goes back to if you rewind a little bit in the show and we talk about, we pull way back and let's talk about the 5 we're potentially getting to now.
Yep.
That's exactly the same scenario, right? So if you're paying attention to this and you know the 5 is coming, you know it's coming. You all we're doing is looking for a reason.
Right. That's right.
And once we get that confirmed, sometimes you're going to call it
a little early.
Might be a little late.
What
the point is hopefully the point is that you're not going to take that massive loss.
Right.
And if I've got a big chunk, I don't care if I've got 100,000 in my TSP or 10,000. Right, you're just starting out. You got 10 or 15, 25,000. Why would you take that hit?
What if you were going to buy a car today and you knew it was going to be cheaper tomorrow? Would you buy it today?
No,
of course not.
Right,
of course not. Obviously not. Right. I just.
Hopefully, it's soaking in. Hopefully, we're getting through. I mean, it took me a few years to wrap my head around it.
There's no doubt in my mind we're going to get comments up the wazoo on Facebook about you guys are all wrong, and I would love to. It'll be you guys are all wrong. Nobody will say, and here's why.
Right.
It'll be, you guys are all wrong. Don't you know the conventional wisdom is blah, 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 blah.
Yeah. How about you? I mean, if you can articulate why we're wrong, I want to hear it.
Oh, it'd be fantastic.
Yeah.
Come on the show
and I'm interested
we'll talk about
it too.
it. Yeah, absolutely.
Yeah, we'll have you as a guest on the show. And I don't mean that to be sarcastic.
No, for real.
We really appreciate it when people take time to kind of qualify your answer.
Yeah.
Right? Those are the really good. That's what this group in our Facebook group and our public group is about, is we want to have that kind of real back and forth talk. A lot of it is just kind of like, this is what I heard.
Yeah. Yeah.
Yeah.
All right. So this is kind of the how to do it in IBD, and here's their more or less results. So, and I put this up for a couple of reasons. In their example, they use the NASDAQ, right? NASDAQ is much more volatile than anything we have in S&P. It's a tech index. And so if you rode the NASDAQ is in green on this chart. If you use the IBD methodology, right? When it's in a confirmed uptrend, you're fully in the NASDAQ. When their algorithm says that market's under pressure, you go to 50% G fund, 50% NASDAQ. When the market's in correction, you're going to 100% G fund. So what happened is, in 2008, right, coming from back here, the market was in an uptrend, and so they were all moving together. Market rolled over, NASDAQ went down and kept going lower. At some point, IBD says, went from markets in an uptrend to markets under pressure to markets in correction.
They went 50-50 to zero.
To zero, right. And you see that because they stopped moving down while the NASDAQ kept moving down.
Right.
And you got it's even more obvious over here. This huge hit that the NASDAQ took in green, IBD barely took
because
anything.
They quickly went from 100 to 50-50 to
zero. Like, it probably happened in like 1 or 2 days.
Yeah.
So does it always work? Absolutely not. We show this, right? It changed to market under pressure from confirmed uptrend on July 16th. After Friday's close of this week, it changed back to market in confirmed uptrend. So what does that mean? It means IBD did not get the gains that we got this week.
Right.
Whoopie-doo.
Exactly. In the big picture.
In the big picture? Yeah. If that's your big picture.
Yeah. And that's what they're worried about.
Right.
That's what millionaires look at.
Yes. Yeah.
Big picture.
The fact that they don't have a dip here
and I shouldn't
much
just say
smaller
millionaires.
one here.
People that made millions by doing this are looking at it this way.
Yeah.
Yeah. Not all millionaires
All right.
do it that way.
That's all I can. That's as far down that particular rabbit hole as
Come
I can
back out of the
today.
rabbit hole and let's talk about crypto.
Yeah.
And by the way, the reason we talk about these bonus charts is mostly to give you some perspective outside of TSP, right? A lot of people say, what does that have to do with TSP? Nothing. But what it allows us to do is to provide you some more educational material.
Yep.
Without just talking about TSP.
Okay. So reason I did.
I like crypto.
I know you like crypto. We had done Grayscale Bitcoin Trust a few weeks ago, and I've been looking to get into it. I've been looking for a place where the market told me it makes sense in my IRA, not my TSP, in my IRA. I wanted to get into it. So why did I want to get into it, and why did I pick? I think it was Monday, and I got in at 25.65. So far so good. You got a top here. You got an A, B, A, B, C, right? So you got a 1 and a 2. 1, 2, 3, 4, 5 for 3. 1, 2, 3 for 4. 1, 2, 3, 4, 5 for 5. That's one possibility. If that happens, since it's a possibility, this 4 should be roughly the same as this. If we get a rollover here, I'm out. The other possibility is 1, 2, 3, 4, 5. And it's a bottom. And then it goes 1, 2, 3, 4, 5. Or A, B, C, and continues down, one way or the other. But either this is a major bottom right here, or a temporary bottom.
Yep.
Either way, if it's temporary, we come back up to here, it rolls over, I see it, I get out.
Yep.
If it's a major bottom, and I start seeing an impulse move higher, right, which isn't going to happen in one day. Like, we had a nice move off the bottom here. If it goes 1, 2, 3, 4, 5, and then it goes A, B, C, then I know that then we've had an impulse move higher. It's going higher.
Jump back in, or
add to the position.
Add to the position. Is this the only chart you have of this?
Yes.
I want to point out that because I'm always talking about because I've been retired a little bit longer than Jerry. So got the TSP, got the IRA, got a brokerage account. In my IRA, I took a very similar position as Jerry, right? I see the trend is going down. I'm out. Why? I'm not penalized for it. It's a retirement account. Okay, this is kind of an example of why they're different, and why when you hear people talking generally on TV and in our forums sometimes about how to treat these things, they're treating it like a brokerage account. Okay, in my IRA, go back to the chart. I jumped out when Jerry jumped out. In my brokerage account, I did not.
Right.
Why? Because in my brokerage account, I'm going to have to pay capital gains on what I sold, theoretically, right? That's the idea. And so I might take a buy and hold because I'm also knowing the trend that I'm not going to go that far before we get, like,
right.
That's when I'm...
Yeah, your line's in the sand.
Personally, I'm pulling way back and going, okay, where's the larger trend?
Right.
That's when buy and hold can work for you, and it generally does, right? If you're really educated on that asset, whatever it is, right? That's a position. That's a methodology where buy and hold can work for you, right? Doesn't mean I've got a crystal ball. I don't know what Bitcoin's going to do, but I'm doing a lot of fundamental analysis, and using technical analysis. Anyway, the difference is in my IRA, I was out why? Because I'm not penalized.
Right.
The only way I get penalized is if I stay in. Mm-hmm. That's the opposite kind of thinking, right? If I was to stay in my IRA and take that hit, right, and then ride it back up, I've gained nothing. Right? Get out when you see the confirmed trend down. Get back in when you see the confirmed trend up. That's in a retirement account. Yep. That's how you treat retirement account versus
how we do it in TSP. Yep.
Exactly. Yep. And I think it's taking a lot of time for people to stop listening to brokerage account mentality and figure out retirement accounts different.
Yeah.
I really think if there's one thing we do in the next 20 years with this little project, if we can get people to understand the difference between those two kind of fundamentals, it's going to change people's way of managing their retirement account. Because most people, most advisors out there, they're going to treat your retirement account like a brokerage account. Because they don't know any different.
Well, I mean, I don't want to go down this track, but I don't know if you saw somebody put up a roll call article about, and I hadn't heard about it, and I'm really curious to see how it plays out. But apparently, starting next summer, I think it is, TSP is buying into what's called ESG mutual funds, environmental. Mm-hmm. What's that stand for? Do you know?
I can't remember.
Yeah, it's basically the ability to buy environmental social government
sort of
governance, environmental
green,
social governance funds. They're generally green or
socially forward, positive, whatever.
Right. They make you feel good when you invest in them. Right. That's great. Mm. As you would expect, I'm going to give you the answer you'd expect me to give you. If these funds have a low cost basis like the TSP funds do, which I find very hard to believe if they're going to be mutual funds, but which means the idea would be you would buy into them because you feel good about this green mutual fund, right? You're not going to trade it. You're going to keep buying into it. You're going to do the buy and hold.
Because you want to support those companies.
Right. You're supporting that philosophy of life in the world and things. It has nothing to do with whether or not your account is going up
money.
and down. Yeah. So if this time next year we have these options, it's going to make my head explode because people are going to be like, "What do you think about the Green New Deal plan?" And I'm going to be like, "Does it make you any money?"
Yeah.
If it makes you sleep better at night because you feel like you're
contributing to the wealth of society, right?
Then absolutely.
Yeah,
absolutely do it. If you're trying to grow your TSP,
I'd rather give my money to charity than give my money to companies that I can't control. Whether they're going up or down. I don't have any control.
This whole thing is going to be really interesting to see how it plays out. But anyway,
all right. We'll stay out of that rabbit hole for now.
So let me. So that's Grayscale Bitcoin Trust and why we did what we did, and the first target right now is that. The second target is that, and we'll see how it goes. Okay, the 18-month weekly charts. So we've been saying this here for a while. The C fund on a weekly basis came down, hit the 10-week. So the 10-week moving average is basically the same line as the 50-day moving average. So the blue line here is the 10-week moving average. If you're not looking at TSP every day and you only want to look at it once a week, as you can see, once we got back above the 10-week moving average line here, in end of March, beginning of April 2020, we had that's about it. Only twice did the C fund close for the week below its 10-week moving average. So if I'm a long-term TSP investor and I don't have a lot of time to mess with this, the only line in the sand I have is, did the C fund close above, C fund S&P 500, did it close above its 10-week moving average line this week? If the answer is yes, I rock on until next week. If the answer is no, now I have to look at it and figure out if I want to move to the G fund. But obviously the long-term trend here, as long as the C fund stays above its 10-week moving average line, you're in good shape. You're going to take a little bit of volatility. It might be 2, 3, 5%, but until it gets below that line, you're in good shape. S fund, similar but not the same. Absolutely read the newsletter that comes out at 6:30 on Sunday night. We do a very deep dive into the S fund and why I think it has a lot of potential right now. The Elliott wave count is really, really good, and you can read it in the newsletter. But let me just say this about that. We got a lot of pent up. It's almost like the chart that we showed from 66 to 82. You get a lot of pent up sideways movement here for the last 3 or 4 months. Almost all of 2021, the S fund has gone flat. It was by far the leader from the COVID recovery, by far. Matter of fact, the S fund from 900 to 2300 is 150%. It's a 150% move. Huge. Then it went sideways for almost 4 months. This piece right here, I think, is going to end up being really important. So you can read the deep dive on the newsletter. iFund's kind of tricky. Had a good week. Was up, a little more than 1%. Closed on its 10-day or 10-week moving average line, but it's definitely hanging out there below its 10-week moving average line. I mean, the last time we had that was really back here. So I don't know. We have to see what happens and let it play out a little bit. Having said that, the last time the iFund had a significant bottom, the RSI was just about at that median line, and the slow stochastic was there also. And right now, we got the iFund a little bit above it, and slow stochastic right at that median line. So if the MACD can turn back around and go positive, this could be a bottom in place for the iFund. We shall see. F fund, nothing's changed much. It's actually riding its 10-day moving average line. If you looked at it on a daily chart, it's riding its 10-day moving average line higher. We got a pretty good volume this week on an up week. We got slow stochastic riding sideways above that 80% number, which is good. We've had RSI trending higher for quite a while. You had the MACD crossover positive back here. Everything is moving up on the F fund. The biggest thing that's driving the F fund right now, without a doubt, is the 10-year interest rate. So you hear about it on Bloomberg and CNBC all the time. If you're tracking this at all, as the interest rates decrease, the F fund will continue to increase. So I don't know if anybody heard the European Central Bank chairwoman came out a couple days ago and did a big statement, and the bottom line is they're doing quantitative easing, like they called it QE forever on Bloomberg. I mean, they're going to have to just keep pumping money into the system to keep the game going. And as long as they come out and tell everybody that they're doing that, stocks keep moving higher, interest rates keep moving lower, and the F fund keeps moving higher. So that's that.
Questions.
I don't know if we're gonna get questions, but I'm gonna put my vest on because I know we're gonna get some sharpshooters.
Yeah, we're gonna get a lot of comments. I hope, because most of all, because I'm boosting this show, which means like sometimes we don't always boost it depending on how things work out. But I'm able to do that this week, and meaning more people should see it. Yep. And I'm hoping, because I think there's a lot of good info in here, particularly with the whole G fund discussion. Yeah, for sure. So if you like the show, please share it with your friends.
Yeah.
If you don't like the show,
please share it with your friends.
Please share it with your friends. Don't share it with us. No, it's okay. We have thick skin. You can give us any comments you want. What we really like to hear is what you want to hear.
Yeah.
So if we're not covering things you think are valuable, let us know, man. We'll cover just about anything as long as it's generally related to TSP on this show. And we also are starting looking for feedback on who you'd like to see on here as a guest. Yep. So as we kind of work out our remote capabilities, part of the reason why we've been doing that with Jerry and I in different places is so that we can get better at bringing in guests to the show, because it's highly unlikely they're going to fly into DC and come here in the studio. Yeah. Like, we're not that kind of show. We're not Joe Rogan. We don't have $50 million. So if you have some ideas on who you think want to be on the show, and maybe it's a person on our group, or maybe it's a member of our site, whatever. Give us some ideas.
Yep.
All right. You got anything else for us, Jerry?
I am good.
Man, I think it is time to rock and roll. All right.
Have a great week.
See you guys.